Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock and why the company is severely undervalued right now. So we will be going over their latest price targets, price predictions, as well as where the company could be headed in the future. On top of that, we'll be analyzing 3 articles to get their latest news updates to where NIO has experienced a phenomenal analyst price target upgrade, which is going to do wonders for the overall company. After that, we'll discuss if NIO can grow by around 50% in their overall deliveries, and then lastly, we'll discuss why NIO has popped recently based off of a giant surge that we have experienced in electric vehicle investments. So for more videos just like this one, go ahead and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's get right into today's stories. NIO is an electric vehicle company headquartered over in China, and right now the NIO share price trades for just $12. However, professionals believe this company is almost undervalued right now because at minimum, experts believe the company should be trading at around $10, while other professionals believe this company is worth somewhere around $28. So in this video, we will discuss which one of these price targets are actually correct. Between 2022 and 2030, a Mizuho analyst says that the BEV market, or the battery electric vehicle market, will grow at a CAGR, or a compounding annual growth rate, year over year by close to 22% globally. And he believes this industry will be resistant and immune to macroeconomic risks and higher interest rates, which is the exact type of macroeconomic environment we are in right now. So investing into electric vehicles right now may be your best bet. China is literally a leader in this particular space, where roughly 64% of all battery electric vehicles are sold in China, followed by 19% over in Europe and then 10% over in the United States. Clearly, China is a huge player, and NIO is right in the heart of this market, being a giant Chinese EV maker. NIO is also trying to branch out and infiltrate further into Europe as well. However, this analyst believes that NIO is very well positioned, and he says, and I quote, "We see NIO well positioned as a leading premium EV player in China, the largest EV market globally." The 5-star analyst goes on to say, "We believe NIO differentiates itself with its proprietary battery as a service swapping program, which could see tailwinds as it expands into Europe, the second largest EV market," end quote. So this is absolutely phenomenal. Not only do they have great cars that are premium vehicles selling for non-premium prices, they also have a proprietary technology which is very innovative to various consumers. On top of that, this company's share price could surge over the next few months due to 2 main catalysts. And one would be that they are set to release 2 new model vehicles, such as their EC7 and their ES8, which will both be launching this year. The EC7 is slated to start being launched in May of 2023, while the ES8 will be launched in June. This provides a phenomenal catalyst for this company, not only to increase their overall delivery numbers and revenues, but also for them to attract more customers. The analyst also goes on to note that NIO has great expansion plans to further infiltrate Europe, thus increasing the gap between NIO and their competition. Overall, the 5-star analyst gives NIO a buy rating with a $28 12-month stock price target, meaning that over the next 12 months, some investors could experience as high as 140% returns if this analyst decides to be right. Now, I think we should give this analyst and price target a grain of salt. However, because this price target comes from a 5-star analyst, we can weigh it more heavily than, say, a lower star analyst or some random financial reporter. This means essentially that NIO is primed for future growth, and even if they don't achieve that $28 price prediction over the next 12 months, they will grow into their overall valuation. And that leads us to our next article, to where NIO is growing very substantially, to where they could be delivering around a 50% CAGR in terms of their electric vehicle deliveries. This will reflect very positively in their overall revenue and, of course, their earnings earnings per share, thus invigorating investors to buy even more shares due to very positive earnings reports. To put this into perspective, NIO ended the full year of 2022 with around 122,486 deliveries, which broke two records in November and December for the amount of vehicles they were selling. So now let's look further into 2023 to see what NIO's delivery numbers could be. NIO literally has the potential to record a 50% CAGR for their delivery growth numbers, and the author of this article believes that this is a firm projection that NIO can achieve. If you're familiar with Tesla, Tesla is also growing at around a 50% CAGR in terms of their delivery, and this is supposed to somewhat be similar with other very competitive electric vehicle makers. However, for NIO to only achieve approximately a 30% year-over-year growth rate for their deliveries, that's not going to be strong enough. NIO needs to overachieve so they can meet their overall valuation and get more investors into their stock. This scenario of only a 30% CAGR will reflect poorly on NIO as well as their share price, and it means they're going to be swallowed up by the competition. Clearly, if you are an investor into NIO, you do not want that. Also, I want to say that NIO has some unnecessary risk involved with it because you're investing into ADR shares. Clearly, NIO is not a United States company, so you are investing into a foreign Chinese electric vehicle company. This means that if anything were to go wrong politically between the West and the East, or the United States and China, we could see stocks absolutely plummet. We saw the same thing happen in regards to Russian stocks when they attacked Ukraine. Investors decided to liquidate their shares and absolutely throw out any of those Russian companies. A similar thing could happen if China decides to do something as rash as that. However, for their overall 2023 outlook, NIO looks primed for future growth. Even though in the short term the company could fall in their share price over the next year or two, the company is very stable and should return value to their shareholders. And don't take my word for it, many five-star analysts and professionals completely agree with me. NIO is very consistent with their overall production and growth numbers, to where the author as well as myself believe that NIO is on track to achieve anywhere from between 180,000 to 195,000 electric vehicle deliveries for the full year of 2023. That would put NIO over a 50% year-over-year delivery growth rate, thus satisfying investors, increasing their revenues, aligning themselves better with future forecasts toward profitability, and ultimately it reflects very positively on the overall company. Now, with that being said, clearly NIO can enhance themselves financially because there is still room for improvement regarding their EBITDA, which is actually moving further in the red. But on face value, if we look at their various accounting ratios, we can see that this company is a great buying opportunity from a value standpoint. Clearly, NIO is not profitable and they are not projected to become profitable over the next year. And that means that their break even is still not in sight as of right now, according to multiple investors. But in the future, they are anticipated to achieve profitability, and boy, once they achieve it, they will absolutely boom. At their current values, regarding their initial market capitalization and the revenues they are bringing in, at an initial revenue estimate of $13.8 billion and a 3x EV revenue multiple for the full year of 2023, shares could be trading at around $27. Again, not far off from that $28 price target that we talked about in the previous article. This means that multiple professionals are aligning this company with substantial growth because right now it's just $12. NIO is going to be a phenomenal company in the future if it keeps up their current growth rate and it continues to execute on time. With deliveries numbering 180,000 or more, NIO has a great growth trajectory ahead of them, despite short-term losses here or there. So even if we look at the forward PS ratio of this company, they are relatively cheap compared to their competition. However, NIO is not the only name in this market. You also have Li Auto as well as Xpeng, which I would encourage you to do research in, because all three of these companies have something that they are very good at. For me personally, I like NIO's proprietary software due to their their battery as a service and their battery swapping stations. I think that gives NIO great leeway and the ability to scale this model on a subscription basis, which will give them reoccurring annual revenues, because subscription models are so valuable and they return huge dividends for companies. Lastly, let's talk about why NIO and other electric vehicle companies are up right now. Well, essentially, NIO, as well as Rivian, Lucid, Faraday Future, Canoo, Fisker, and multiple other electric vehicles are up not only due to the earnings report from Tesla, but also because investors are gravitating back toward electric vehicle stocks due to their ability to circumnavigate the overall macroeconomic environment. The only problem is that if a mild recession happens, consumers will gravitate more toward used vehicles, not new electric vehicles. But until that happens, these electric vehicles are clearly riding the momentum and riding the wave that Tesla themselves has recently created due to their amazing earnings report, which I talked about in a previous video, as well as the 4 huge catalysts that I think will cause the TSLA share price for Tesla to increase even further. So if you haven't watched that video, I would encourage you to go and watch that. But that is all for NIO on this video. I would love to hear your thoughts down below. Go ahead and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.